Britain made a fatal mistake by trying to blackmail Washington. You thought aircraft carriers ruled the world? You're wrong. For the last 300 years, global trade was controlled by a simple coffee shop in London. While Britain was deciding who was allowed to sail and who wasn't, Trump was preparing to strike. Lloyd's of London withdrew their insurance to provoke global chaos and stop Trump. But instead of panic, they received the order to impose the DFC. In one day, the US took over the market that Britain had spent centuries building. Want to know what the end of an empire looks like in real time? Let's discuss it. Britain never really lost its empire. It just changed the uniform. In 1688, a coffee house in the city of London called Edward Lloyd's became the place where ship owners came to get their vessels insured. Simple enough. One merchant talks to another, a handshake, a signature on a slip of paper. That's it. That's how you rule the world. Fast forward 3 centuries. In 2026, Lloyd's of London still controls 30% of all global offshore energy insurance and 10% of all marine hull premiums worldwide. Think about what that number actually means. Every supertanker, every LNG carrier, every offshore drilling platform from the Gulf of Mexico to the South China Sea, a significant portion of them are underwritten directly or indirectly by a market based in 1 square mile of the City of London. Now ask yourself, what happens if Lloyd says no? This is the mechanism that nobody talks about. They call it no cover, and it is the most elegant weapon ever invented because it leaves no fingerprints. A $200 million tanker without insurance is not a ship. It's a floating liability. No bank will finance its fuel. No port will let it dock, because if it has an accident, who pays? No port authority in the world takes that risk. So the ship sits, the oil sits, the contracts collapse. No shots fired, no sanctions voted on in the UN Security Council. Just a piece of paper. Or rather, the absence of one. I want you to hold that image in your mind. The most powerful weapon in the world is a blank signature line. Britain used this weapon for decades. When London decided it didn't like Iranian oil exports in 2010, before the formal SWIFT sanctions, before the executive orders, Lloyd's and the major protection and indemnity clubs simply began withdrawing coverage for vessels calling at Iranian ports. Ships stopped. Commerce froze. A nation of 85 million people felt the economic pressure not from a warship, but from an underwriter in EC3. That's the game, that's the board. Now let's talk about what happened when someone flipped the board over entirely. Operation Epic Fury begins on February 28, 2026. Within 72 hours, Lloyd's syndicates and the major P&I clubs, the UK P&I Club, the North of England P&I Club, and Guard issue formal notices withdrawing war risk coverage for vessels transiting the Arabian Gulf. The decision is technically actuarial. The risk models show elevated threat environments. The premiums would be prohibitive, so coverage is withdrawn. Technically actuarial, politically devastating. 150 tankers anchor at the mouth of the Strait of Hormuz. Let me translate that number into something tangible. Those 150 vessels are carrying approximately 150 million barrels of oil. At March 2026 prices, that's roughly $12 billion in hydrocarbons sitting motionless on the water every day. They don't move. Someone somewhere is paying a demurrage fee. Contracts are breached. Refineries in South Korea, Japan, and India start drawing down strategic reserves. The margin is thinner than anyone publicly admits. And the Strait of Hormuz is not just an oil transit point. 25% of the world's seaborne oil passes through here. 20% of global LNG. When those 150 tankers stop, the entire downstream supply chain, from German petrochemical plants to Taiwanese semiconductor fabs that need LNG for their power grid, begins to feel the pressure. This is what systemic fragility looks like from the inside. Now here is the detail that the mainstream coverage missed almost entirely, buried under the footage of airstrikes. Britain had already refused. Weeks before Epic Fury began, the Starmer government declined Washington's request to use Diego Garcia, the British Indian Ocean Territory base, arguably the single most strategically valuable piece of real estate in the Indo-Pacific for strike operations. The official language was diplomatic. The functional meaning was unambiguous. London would not be a party to this operation. So Washington launched without London. And London apparently decided that if it couldn't control the military operation, it would control the economic one. The insurance withdrawal wasn't just risk management, it was a signal. You used our strategic geography without our consent. Now you'll run your war without our paper. I'm not assigning moral weight to this. I'm describing interests meeting resources. Britain had one lever left of genuine global significance, the City of London's role as the world's risk underwriter. They pulled it. What they didn't anticipate was the speed of the response. March 3rd, 2026. Trump doesn't call a press conference. He doesn't convene an emergency session of the National Security Council, at least not one that produces a memo. He posts on Truth Social. The post is characteristically blunt. The substance is historically unprecedented. The U.S. Development Finance Corporation, the DFC, America's sovereign development bank with a $60 billion capital base, is directed to provide political risk insurance for all commercial vessels transiting the Arabian Gulf. U.S. government-backed guarantees full stop. Let me explain what just happened, because the financial press took 3 days to fully process it, and most of the general media never did. The DFC was created to provide insurance and financing for U.S. interests in developing markets. It was designed for projects in sub-Saharan Africa and Southeast Asia, backing telecoms infrastructure and energy projects where private capital won't go without a sovereign backstop. Trump just applied that architecture to maritime trade insurance in an active conflict zone and used it to replace the London market entirely. Think about the logic from a pure power perspective. Lloyd's withdraws coverage because the risk is too high. Fine. The DFC steps in and says, the U.S. Treasury is your counterparty now. You want to sail through the Gulf, you're covered, not by a syndicate of Lloyd's names in EC3, but by the full faith and credit of the United States government. What does a ship owner do when offered that choice? They sail. Within 48 hours of the DFC announcement, 14 tanker operators publicly confirmed they were proceeding with Gulf transits under U.S. sovereign guarantee. The Lloyd's withdrawal had effectively become irrelevant. The financial consequences for London were immediate and structural. Marine and energy insurance is not a small corner of the Lloyd's market. It is foundational to the entire ecosystem. The premiums from Gulf energy shipping underwrite broker relationships, reinsurance relationships, and credit relationships that extend across the entire London market. When those premiums evaporate, the downstream effects cascade. London's financial sector generates approximately 9% of UK GDP. When a meaningful portion of the world's maritime insurance business migrates from a British sovereign guarantee to an American one, not temporarily, not as a wartime exception, but as a structural new reality, the arithmetic for the UK economy becomes uncomfortable very quickly. Britain tried to block a base. Trump hit the one thing Britain couldn't afford to lose. This is what economic warfare at the sovereign level looks like. No tariff schedules, no WTO complaints, just a guarantee, and the sudden very public obsolescence of someone else's guarantee. While London absorbed the implications of what had just happened, the rest of the world was doing something more practical. It was making new arrangements. Germany moved first, and it moved fast. Chancellor Friedrich Merz had already signaled before the Epic Fury operation that Germany's energy policy framework needed reassessment. The Energiewende, Germany's most controversial energy chapter, he called it, publicly what German conservatives had said privately for years, a strategic mistake, not an ideological position, a resource calculation. Germany needs baseload power. It has no domestic hydrocarbons of consequence. Its industrial competitiveness, the entire model of German manufacturing that makes Volkswagen BASF and Siemens possible, depends on predictable, affordable energy. When the Hormuz logjam froze LNG supplies and spot prices spiked, it wasn't a geopolitical abstraction in Berlin. It was a factory floor problem, an industrial orders problem, a jobs problem. Merz didn't denounce Trump, he called Washington. And in doing so, he effectively declared something that European political commentary still refuses to fully acknowledge. The era of European strategic autonomy as a coherent project is over. When the pressure is real, not theoretical, not a think tank scenario, Germany chooses energy security and the transatlantic relationship over solidarity with a British government that has no energy to offer and no fleet to project. China, meanwhile, had never played by these rules at all. Here is the fact that sits at the center of the Hormuz story and that Western analysis consistently underweights. While 150 Western-insured tankers sat anchored at the Strait, Chinese-flagged and Chinese-insured vessels continued to move. China has spent the better part of a decade building exactly the parallel infrastructure that makes this possible. The gray fleet tankers operating outside Western insurance and financial systems, many of them sanctioned vessels carrying Iranian and Russian crude, gave China a template. State-owned insurance through entities like Sinosure and the PICC Group provides sovereign backing without reference to Lloyd's, without reference to the London P&I clubs, without reference to any Western financial institution. China didn't circumvent the system. In March 2026, China had already built the exit door. And here's what the OSINT community surfaced during the crisis, the detail that made Western defense establishments genuinely uncomfortable. Chinese commercial satellite startups using openly available imagery, the kind sold to anyone with a credit card and a research subscription, were tracking the USS Gerald R. Ford Carrier Strike Group and Patriot battery deployments in near real-time, publishing the data openly. The strategic ambiguity that U.S. power projection has historically depended on the uncertainty about where assets are. What they can reach was being dissolved by a Chinese commercial startup in Shenzhen. This is the new environment, not the Cold War's two-sided secrecy. A world where your aircraft carrier's position is a data set. In that world, the Trump administration made a decision that is underappreciated in its pragmatism: go direct. The Trump-Xi summit being prepared for March 31st, 2026 is not a negotiation between adversaries in the traditional sense. It is two sovereigns dividing a set of practical questions: who controls what corridor, under what guarantee, at what cost. The framing of the relationship, competition, rivalry, strategic decoupling doesn't disappear. But beneath it, something more durable is being established: a set of operating agreements between the only two powers that can actually enforce them. Merz is in the room, or adjacent to it, as the representative of European industrial capacity that needs the deal to work. Starmer is not in the room. Not because he wasn't invited in any formal sense, but because Britain has nothing left to put on the table that either Washington or Beijing needs. Let me be precise about the military dimension, because it's easy to either over-romanticize or under-analyze it. Operation Epic Fury, in the 48 hours following its initiation on February 28th, involved over 2,000 strike sorties conducted by U.S. and Israeli air assets. The target set was specific and ambitious: 300 Iranian ballistic missile launchers, the dispersed road mobile systems that represent Tehran's primary deterrent against regional intervention, and the Natanz nuclear enrichment facility, the symbolic and functional center of Iran's nuclear program. The scale of that air campaign is historically significant. 2,000 sorties in 48 hours is a tempo that matches or exceeds the opening phase of Operation Desert Storm. The logistics required tanker support, CAD packages, intelligence fusion, targeting coordination with Israeli F-35 represent the full weight of American air power applied without hesitation. The 300 launchers matter because they are the reason a carrier strike group hesitates in the Gulf. Iranian anti-ship ballistic missiles, the Khalij Fars and its successors, represent a genuine threat to surface combatants at ranges that make the Gulf a contested environment. Eliminating that launcher network changes the military geometry of the entire region. Natanz matters because it is the program, not the only facility, not the last word, but the symbol, the technical heart, the point around which a decade of diplomacy has circled. And here is the observation I want to offer, not a conclusion, just a framing. Military dominance has historically been considered sufficient. You control the skies, you control the ground, you control the sea, you win. But in March 2026, the United States Air Force and the Israeli Air Force conducted one of the most successful air campaigns in recent memory. And simultaneously, a group of insurance underwriters in London nearly paralyzed the economic rationale for conducting it in the first place. You can win the air war and lose the trade war. You can destroy 300 missile launchers and watch your allies' oil supplies freeze because a market in the City of London decided the risk premium was too high. Trump understood this, whether instinctively or through explicit analysis. The DFC move was the answer to a question that military commanders traditionally don't ask: who controls the economic conditions under which our military victory becomes meaningful? The answer, until March 2026, was London. After March 2026, the answer begins to change. I've given you the facts, as I understand them, the timeline, the numbers, the sequence of decisions. Here's what I won't do. I won't tell you this is good or bad. I won't tell you the world is safer or more dangerous. I won't tell you Trump was right or London was wrong. What I will tell you is this. For 300 years, the architecture of global trade rested on a specific assumption that risk could only be legitimized through a private market based in London. That assumption created enormous stability and enormous dependency. Simultaneously, it gave Britain a form of power that outlasted its navy, outlasted its empire, and outlasted its manufacturing base. In the space of roughly 72 hours in early March 2026, that assumption was tested by a sovereign guarantee, and the sovereign guarantee won. What replaces it is not yet clear. A world where trade routes are guaranteed by the U.S. Treasury rather than Lloyd syndicates is a different world. Not obviously better or worse, but structurally different. It's a world where access to trade is a function of geopolitical alignment rather than actuarial tables. Where the question isn't, can you afford the premium, but are you inside the American security perimeter or outside it? That is a question with very large implications for very many countries that have spent decades trying not to answer it. The tankers are moving again through the Strait of Hormuz. The oil is flowing. The numbers are recovering. But the paper empire, the one that ran on signatures and syndicates and the quiet authority of a market in the City of London, that is not recovering. Some structures, once cracked, don't heal. They reorganize around the crack. We are living in the reorganization. For 3 centuries, London decided who floated and who stood still. Now it's Washington. Tell me in the comments, is this a change of rules or a change of jailer?